Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio. We're going to talk about a few things, and as we usually do, we'll update the dividend tracker on trackyourdividends.com and update you guys on the performance of the portfolio and show you all the buys that I made today. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here, Canadian markets will be closed on Monday due to Victoria Day. So it is a long weekend for us. But the US market will still be open. So if you're wondering about that, that is there for notification. But as for today, the portfolio at the end of the week closed lower than we were at like last couple days here at $11,672 and a penny. We're up $90.54. Up 0.78% for the day. For the 1 week, we are down $179.59, down a whopping 1.52%. For the 1 month, we're down $903.99, down 7.19%. For the 3 months, we're down $1,047 and a penny, down 8.23%. Oh, it hurts just a little. And for the 1 year, we are up even $361, up 3.19%. And for the all, we are up $1,166.55, up 11.10%. The purchases we made today were in Cisco Systems Inc., ticker symbol CSCO, closing out at $42.94 US. We are up $1.22, up 2.92%. We now have 21 shares and holds about 10.09% of the portfolio. As you may have known or know, Cisco Systems Inc. reported their earnings and it wasn't so hot. And that led to a massive drop in Cisco's stock price, but that's okay. It gives us a opportunity to buy at that lower price. And at a 3.57% yield, it ain't that bad, especially for this company. So Cisco Systems Inc., ticker symbol CSCO, we bought 3 shares today at $41.95, which came out to $125.84 US and $163.40 Canadian. And we did pay a trading fee. As we know, Wealthsimple Trade does have that fee for when you buy US stocks. And that trading fee came out to $1.89 for those that are wondering. Now, just so you know, that is still better than most trading platforms that give you a trading fee for however many shares you buy, whether it's bulk or not. 500 shares you buy, it's still flat, sometimes a flat fee, sometimes a percentage, but it's still better than most. And so for those that are going to say something about the trading fee, I don't really care. All right. The next position that we went and purchased was in Manulife Financial Corporations, which is an insurance company, closing out at $22.43, down 20 cents on the day, down 0.88%. We now have 52 shares, holds about 10% of the portfolio, which is fantastic. Average price of getting in is $22.34, which is lower than what it closed out at today. We had purchased a whopping 10 shares of Manulife Financial Corporation, ticker symbol MFC, and we purchased them at $22.38, and our total cost of getting in is $223.80 Canadian. And as we do when we usually purchase stocks in this portfolio, we go ahead and throw $25 into a fractional buy into VFV, which is the Vanguard S&P 500 ETF. As you can see here, it closed out at $89.03, up 15 cents on the day, up 0.17%. We now have 5 shares, whole shares, holds about 3.89% of the portfolio. And as we go down, I'll show you, we purchased 0.2852 of a share at $87 and about 65 cents, which came out to $25 Canadian. And so that is the portfolio there updated for you guys. We have $19.40 in the cash account. These are on my watch list, and we'll head back to this one here. And so we'll head over to trackyourdividends.com to update things here. And as you can see here, this is the portfolio as it stands today without the updated positions. You can see a portfolio yield if you build a portfolio as it stands today. 3.74%. Our yield on cost is 4.21%. Annual income coming in at $419 in dividends. And that is for just this portfolio in general. That's an ad. We will get rid of that. And we'll go ahead and change this to a US portfolio as we update the portfolio. We'll go ahead and add a holding from Cisco Systems Inc., which is ticker symbol is CSCO. And we purchased 3 shares at a very generous price of $41 and about 95 cents if you round up. So we'll go ahead and add that holding. Switch back over to Canadian here. Update the portfolio. Add another holding, ticker symbol MFC for Manulife Financial Corporation. We purchased 10 shares of that at a price of each share coming at $22.38. We'll go ahead and add that holding. We'll add one more holding of VFV, not VFC.TO, Vanguard S&P 500 ETF. We purchased 0.2852 of a share at a price of $87.65 roughly, if we round. Go ahead and add that holding, and boom, updated portfolio yield. If you're to build a portfolio with the updated position, you would be looking at 3.77% of a yield. Our yield on cost with the strategy of dollar cost averaging is, of course, a bit higher as we buy the dips and we buy the ups and the downs and the sideways and the lefts and the rights, just all around in general. We are at a yield of 4.24%, which this portfolio is giving us, with an annual income in dividends of $438, of course, divided up quarterly, roughly based on what dividend payments and dividends we receive in the month. Now, one thing to take note is that with the updated positions, you'll see that dividends have increased a little bit. Our goal is to get to $500 this year at least, which I'm sure we will hit. So $500 in free income, not bad at all. As you can see here, Cisco Systems Inc., 21 shares. We're getting about $40 in annual income from these dividends, divided up quarterly. Of course, Manulife, which seems to be the biggest position that we hold in shares. Of course, we are getting about $68.64 from this company alone, and we are a profit of $4.68. VFV as well pays a dividend. We are receiving about $5.59 on this company or ETF alone. If you're to buy VFV today, you would get a bigger yield than we are ourselves, and that goes for the same as VFV. You would get a higher yield than ourselves in this portfolio. So that is the dividend tracker on trackyourdividends.com. Completely free to use. Really nice layout, really easy to use, but also a little bit, the data is not all there, but I'm sure it's still working on it. I don't know the guys that own this company, but still works, serves a purpose, and it definitely has a lot of ads, but I'm sure that's how they continue to keep it free. But you can buy, I think, a subscription based on this one. So that's trackyourdividends.com. We will now head over to ShareSite, which I updated already. Capital gains, you can see we're at negative $1,039 and about 5 cents, down 8.23%. Dividends, we've received $132.75 at 1.05% in the black, and currency gain $33.37 from the US positions we hold, which is up 0.26%. As you can see here, our total return with everything incorporated with each other, it's nice that gives us that performance. You're looking at a downwards negative earnings of $872.93, down 6.91%, which is still not as bad as what the overall market is doing, especially on the growth side. So I'm not too upset about it, but that is ShareSite. You can use this for free. If you go over, like, I think 10 positions, you will have to pay for a subscription to keep everything in check. But I'm really happy with the this platform, of course. And we are just flatlining for the most part. We are not seeing huge amounts of growth like we did in 2020, 2021. And yeah, it's all right. So we'll head back over here and just talk about a few things. Did I make a mistake I probably did. I think last year I talked a little bit about this crash that everyone was talking about, and I think it's finally here. Not a complete free fall crash, but a downwards trend that a lot of people are not used to. And I've seen some comments where they talk about, just buy and hold. It's obviously not that complicated, but everyone's scenario is different. And I just want to talk a little bit about that. When you invest, you have to be willing and be ready enough to invest in money that you're willing to possibly lose. And you don't want to be losing your shirt or your socks over something like this, because it just leaves a bad taste in your mouth, and it kind of hinders you investing in the future and having this kind of fear of doing it ever again, especially for newer investors who haven't been investing for a long period of time. And I'm talking about 5-10 years out, where they're only 2 years in, and they just have this really bad feeling about it. And of course, that's just the stock market, and it does happen. And is this a full correction? I think it pretty much is a correction at this point. And it is probably going to continue to do that trend with everything that's happening in the world. And so, again, if some tips, not advice, is not financial advice, some tips that anybody should take is pay down as much debt as you possibly can, because the cost of borrowing is going up. Inflation is going up, as we all know. It's kind of a broken record at this point. But if you can reduce your amount of debt as quickly as possible, and even if that means stopping investing for the time being, it might be a good idea. If you don't have any debt and you're investing, just be ready to know that the day you invest, the next day it might be down to 3, 4, 5%. And that's just the way it is right now. And of course, there's going to be people out there, oh, this is a great opportunity to buy, but it's also a great opportunity for you to maybe look at your finances, really look at the pennies, and figure out how you can reduce the amount of debt that you have, increase cash flows, and make sure that for the time being, you're ready for the next wave of bull market gains. And so that's pretty much it that I really wanted to talk about. But I think I did make a mistake, because a lot of people did call this happening this time in 2022, not necessarily in 2021. And I think that's when I made the video that I didn't believe that there was going to be, and obviously I was wrong. And so I'm going to own up to that, because I do remember saying that in one of my videos, that I was completely wrong, and that the market is downtrending, and it's not for the faint of heart, I guess. And so it gives you that opportunity to invest, but just be aware that the day you do invest, it might be down the next day, unless of course you're buying on a Friday, and Saturday's market's not obviously open, so you won't see it probably till, in Canada's case, Tuesday or Monday for any US citizens watching this video. But as we always do, there's always a reward here. And if you haven't used the link, it is down in the description below. You will get a free stock, not a completely free stock. You get the value of the stock that you pull. And a few videos ago, we did pull Meta Facebook, which is the biggest referral link I've ever gotten. And so shout out to that person. But again, referral link is down below. So we'll go ahead and open this one up and see what we get. And we'll go ahead and reveal it. And we got Helka Mining Company, $5.98. We'll deposit that reward. Clearly they've noticed that I have gotten too many rewards, and so maybe they're reducing it. So Senko, thank you for the $5.98. We will use that towards investing in this portfolio. So thank you for helping my portfolio grow. And Joshua, that is the person that got me the Meta stock. So we got $267 from that one. And Adam coming in with a strong AMC meme stock. We use that to buy the positions we bought today in Cisco Systems Inc., Manulife, and of course VFV. So thank you everyone for watching. Thank you for supporting the channel. Thank you for leaving a like and subscribing. Hope you guys have a great weekend. And don't forget, this is not financial advice. And we'll see you in the next one. Bye.